technical market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Hey, welcome everybody. Wednesday, of course, Master Trader Live, and today we're talking about gaps and power gaps and whether we use them for morning trades, swing trades, core trades, maybe. I mean, gaps are a powerful part of trading. Clearly, there's been some imbalance between supply and demand. Many times it's news related, earnings related, market related. In any event, it's something that occurs that creates opportunities. Now, there's different kinds of gaps. We're not always interested in every gap because, like today, well, there was a fair amount of gaps. I'm just looking at the gap down list. There's about 60 and almost 60 on the gap up. Some days, on a significant, today was a pretty muted open, but some days there's just so many gaps, it's overwhelming. So we have to have a way of narrowing things down as to which ones we're going to pay attention to. And this is one of the, hurdles, whether it's gap trading or any kind of intraday trading that we all have, is that we tend to look at too many things and become overwhelmed and miss opportunities. We're always afraid we're going to miss opportunities, right? But we have to narrow down our focus, especially as intraday traders, because there's just too much information going on, different markets and different time frames that you could look at. So that's part of the learning process. But gaps are something that are worthy of scanning for, not only pre-market, but also at the end of the day. What did those gaps do at the end of the day? Were the gaps filled? Were they not filled? Did they gap over a consolidation or below a consolidation? So there are multiple things to look at besides just the gap as a starting point. It's not a strategy in of itself. It's just that, hey, look here. The same thing as saying, hey, here was this big volume spike. Look here, see what's going on there. And you could have a gap with big volume. And so we combine multiple concepts to form strategies. Gap is one of them. It's a very powerful one. So let's take a look.
Hey, good afternoon. Greg, the same error about the host has stopped it.
I didn't stop it, Dan. I mean, whatever. You have to turn your video on. It was on before.
No.
You were walking around, so I shut it off.
I wanted people to see how I prepare for these.
Okay. All right.
All right. So yeah, good afternoon. Yeah, I love trading gaps, regardless of what the market's doing. We find opportunity every single day. And then we're gonna, as always in these MT Lives, show you our approach to technical approach to trading gaps using the Master Trader method. And this is a fantastic strategy for people who just want to trade an hour in the morning, gaps for day trading, and then go off either to work or to the golf course. It doesn't matter. And we'll show you many examples, but this is our technical approach. Greg just made the comment, a gap or a 180 reversal or whatever the case is not a strategy. It's just something we start with. So as technical based traders, I need a pattern. Now today, we're still going to have a pattern, of course, but the gap is going to be part of the pattern. We'll show you igniting gaps, just bullish and bearish gaps, novice gaps. And then we have to see where that gap is in the trend. Is it extended on multiple time frames? Is it showing relative strength or weakness to the market? And then we enter and manage in between. Definitions here. People like to, and we do this just for conversation, but you'll see it's not going to change the way we put on a trade. First of all, what is a gap? Let's start with the basics. It's where there's no trades took place between two candles. Now, most gaps obviously happen overnight because there's from 4 p.m. market close to 9:30 open Eastern time of the New York Stock Exchange. There's no published trades there. And so the digestion of overnight news with the markets and the stock, we're going to have a gap most of the times. A professional gap is a name that we come up with to say this is a shock event. It's igniting a new move. The new move can be from a trend change, can be from consolidation, and we'll show you how to trade those. A novice one, the stock's already moving up or down. And then it's the exhaustion of that supply or demand when you get a big gap in the same direction that our bias is, okay. And our bias on all of these is we have a bias pre-market and we put it in a 5-minute chart and we see if it confirms our bias pretty much within the first 30 minutes.
Dan, another way of saying this, because we were asked this, I don't know, was it the other MT Live? What's the difference professional and novice? And what I was going to say is, well, a professional gap is one where you would start out and say, would I buy this? And that's subjective because how do you know what to buy or what's your method? There's lots of different ways. But from our point of view, there are a couple of ways of buying, meaning I'm buying on a retracement in an uptrend or shorting on a retracement into the downtrend, or buying a breakout or selling a breakdown. So there was some kind of correction, and then we're expecting that correction to continue the existing trend. And so that gap up was like, okay, that's confirmation. Whereas I would never be thinking to buy this because it's been up like 15 bars in a row and now it gaps up, and we'd say that's novice because who's going to be so silly to buy something that's up so many days in a row and then even gaps higher?
Right. The novices, there is, I mean, just think, the stock's moving up 8, 9, 10 days. And then it gaps up and it's the guy at the local saloon with his buddies. And they're like, you didn't buy this? Are you kidding me? And then they just buy at the absolute worst possible time where demand is exhausted. All the buyers are gone. But let's hold off. We'll show you a picture. And I just typed in Alpha India AI was a pro gap that is setting up for a beautiful entry. So let's look at that later. A continuation gap, it follows a bullish gap, and it's just an additional gap in the same direction. Novice, it's not a novice gap if it happens in the middle of a move. And then, you know, we just have a bullish gap or a bearish gap. It doesn't fit one of these, but don't worry about it because we are going to be trading, as always, based on this chart, price action. Not all gaps are tradable, of course. So it's just a starting point, and we see if there's a pattern. If there's no pattern, just move on. So we show this chart frequently because this is our starting point of 9 examples of bullish setups. And so you could have gaps on every single one of these. But this one in the middle is what we call the pro gap because it's gapping from consolidation over some red bars, creating a shock pattern. And that's exactly this Alpha India that we'll come back and show you. This is just a definition page, and then Greg's going to show you an example right from his advanced gap trading strategies course using his 7-step process. But let me define this first because it's one of the 7 criteria. So when you have a stock that moves up in the morning, a bullish strong move, and it consolidates in the upper third of on a 15-minute chart all day long and closes strong, that's what we call an end of day base. It's just common sense. It's a base. It created a base of support intraday. It's just definitions. This one, it rallied for 2 hours into the close, closing near the high. And that's just for definition. We call this an end of day rally. Why? Because the end of day rally has a higher probability of retracing to major support. It's just common sense, you all, right? This is major support. Look, these blue dots the computer puts on there, and it's 3 higher low bars to the left and the right. So I have multiple major support on a 15-minute chart. Whereas this one, my major support is way the heck down here at the day's low. All
I
right, so-
typed in there, I drew the bars. Right, to explain what Dan is showing you is that the daily bar looks the same,
right,
both
excellent.
examples, but the structure of how it formed intraday is vastly different and has different implications. So this is something as a gap trader, especially one that's going to trade maybe first thing in the morning, there's a big difference in the probability of that working out.
Yeah, and then so in fact, I should paint that big bar on this chart because that's a good visual that you just did. All right, so I'll let Greg take this one because this is his methodical 7-step process that he teaches in his course. And then as we go through these examples, I'll kind of show you my abbreviated 2-step process, you know, in real time.
All right, so we start with the daily chart, and is it a setup that we're interested in to either buy or short? And in this example, we've got a consolidation right there. It's going sideways, and so we look at the gap. Is it gapping above or below support or resistance? All right, it's gapping above. Check one. Is it gapping above or below a wide range bar, a topping tail, or a bottoming tail bar? So was there some signal that occurred the prior day? A wide range bar, well, was it a red one or is it a green one? Right? Was it implying up or down? Same with a bottoming tail or a topping tail. A topping tail, it went up and came down, so sellers took control. Bottoming tail, vice versa. So what we have on that day was a topping tail, but it's within a consolidation, which initially implies that, hey, sellers took control, and if it breaks that day's low, it could go down. Well, it would have to break below the bottom of this whole base here to really be bearish. So now, does it gap above or below the basic consolidation? It gapped above, and it gapped above a topping tail bar. So there's a little bit of a shock element to it. So there's the gap. The gap has a void above or below. Well, you really can't see here, but look, if we look over here, why isn't that doing my little thing there? Yeah.
Reverse.
To turn it around, is there something over there to the left? And if we say, hey, there's a void, that means there's no reference of price resistance for people to trade against. Hey, let me sell into that for whatever reason. Greater probability it's going to go up. Now, does it have relative strength or relative weakness? Well, to what? Well, to the broader markets. Is the market gapping up? Is it gapping down? If it's in a particular sector, say it's energy, what oil might be doing, and we can compare, and is it, showing strength or weakness? And then is it an ideal gap? What the hell is an ideal gap? Well, this was at 68 and change, say it gapped up, just going an extreme, it gapped up to $80. That's not ideal. It's so excessive. It could possibly go up more. I've seen big gaps go further. So a big gap isn't necessarily a point to stay away from it. But if it's so ridiculous, it's better to look at another one.
Yeah. And I also say in the morning, like, that's my target, looking at the daily chart. Yeah. And then there's a lot of
it's gapping into resistance.
Yeah.
So we already covered, is it gapping from an end of day base? In other words, it's not extended. So what we do with that is, well, how am I going to get on board? There's different ways of getting on board. The best way is to get on board where prices have pulled back to some support. So in this example here, what was resistance becomes support. That's a theoretical. And pulling back to that area is where buyers should want to show up. And what we're seeing here on this 2-minute chart is that this green line here is related to the red line, right? What was resistance is support. And so it comes down to, if resistance becomes support, there should be buyers at support. So as prices come down to that, I want to see a reversal. Boom, it happened. Buy above the reversal bar and decide where your stop is going to be. Most times in this market environment, putting it right here isn't very good, but there are other management strategies as to where to utilize that. But this is the starting point for all gap trades that are going to be morning gap trades. Let's continue.
So let's say daily and 15. And, I throw out the 15, but it can be 5, it can be 2 on the other ones, but 15 kind of shows you the whole day, which is why I do it. So here I got a rising 20, rising 50. I have slop here. I have nothing of interest at this point in time, except for the gap breakout. I put it on a 5-minute window myself, thumbnail, but here's a 15. And this is a pullback and 2-bar reversal on that minor support, as Greg just explained. And that's my entry over the high of this green bar. Now, I like starting out, and unless you have a nice, if you're day trading, without a doubt, my stop would be under this green bar's low. If I'm swing trading, which is the subject of today's lesson also, how do I make the difference? Number one, well, first of all, your trading plan. Are you approaching this just as a day trade, or are you approaching it as a swing trade, or both? The answer to whether it's a swing trade is there a pattern on the daily chart? And this one was. So there's nothing wrong with day traders trading our swing patterns and just getting off on an intraday, getting off meaning selling, of course, and selling on an intraday trading plan trail, and they're off to the golf course and we're still in the trade as a swing trade. So yeah, Greg did this thing down here. So as a swing trade, my stop is under this closing 15-minute pivot from the prior day. It just gives it more breathing room until, I use the term, till it gets altitude. Now that it closed at the high, and Greg, here's a quiz for everybody. Here's an end of day base. Now I'm confident that it should not turn around and take out the day's low. So now I move my stop from this pivot to the day's low.
What I drew there, Dan, in part was to say, hey, that was a relatively big gap. It was at 109 and it gapped up to say 116. And so it gapped. It wasn't excessive based on the daily chart. But one of the things to take notice of is this thing was crazy in the morning. So what time frame you use is a choice, and utilizing the 15 was good. I don't know what this looked like on the 5, but on the 2 was probably like a EKG if someone having a heart attack with those tails. But what we see happening here, which is pretty powerful, was that looked like it was going to go down. And then you had a sizable green bar flipping right back up again. So that was your entry point into the same area that we looked at on the prior chart. And then you had this, what Dan calls a bear sandwich. That's your continuation pattern. And that red bar, as a day trader, probably gives you a little bit of palpitations there. Just, oh my God, it's going to go down. And when it flips back up again, that's another entry point. That's an ad.
Right.
And that's an ad and raise your stop.
Yeah, and then just trail. You had a monster gain by trailing 15-minute bars.
BC said, so everybody hears, do you trail stop if swing trading this setup? Well, you can't trail stop on a swing trade until you have a reason to as a swing trade. Right? So you wouldn't trail stop it based on what the 15-minute chart was doing. You have to wait. If you entered this, you have to wait for the day to be done, right? Based on where your stop was. If you bought on this day above the highs, at a minimum, it's got to be under those lows, maybe under the 20. You might say, well, Greg, that's far away. Well, it is what it is. You got to share size accordingly, but that doesn't mean you can't add. Just like that was an ad, you can get an ad on a swing trading chart, a daily chart. So this bar's got to be done. And then as it starts to move higher, then you can start to decide, do I start trailing prior days lows? And if it was a narrow bar, you wouldn't do that because the stock would be too close. Whereas if it was a range expansion bar, you could sell half or you start trailing. So money management is, another subject, how to trail stop.
Greg uses the term, it's same but different. And what we mean by that is we're talking about gappers. So I'm going to show you all different flavors of gappers. And these are bullish ones. So I have a multi-week consolidation. I have a 3-bar consolidation at resistance. I have a gap at the top. And don't even look at the intraday yet. Notice how I have no tail here. So that's telling me it was a gap and go. So now let's look at a 15-minute chart. I have my end of day base here because it closed at the high. There's my gap. Now this would have been a great one to show a 5-minute chart because we would have bought a 5-minute high, although this is 15 minutes of data. So you could have bought a 5-minute high. You could have bought this pullback. This red bar would give you the buy setup on a 5-minute chart. And then there's a continuation. Here's a little bull flag continuation. And another great example of day trading or swing trading. It meets both of them.
Yeah, it was a good starting point for sure. You got another one, a similar.
You see, same but different. It's just same but different. Trading range, this one gapped over resistance, small tail. So remember Greg's first slide, 7 pointers. This would have been your 2-minute buy setup.
So
right.
What you would have done, right, just reinforce what we already spoke about, was that the red line, it's not marked here, but look at where the bottom of that bar is. It's the same thing that we looked at. So if we were to have the data where I'm drawing that line, it would be lined up with this. So this pulled back. This is a 15-minute chart. If we were to go back and look at, say, another 2-minute chart, I'm sure what we would find is at the bottom of this bar, there was a buy setup.
Right.
I'm not advocating that you need to use 2-minute charts. For most people, it's probably too fast, but just pointing that out. On this one, the 15-minute closed at its high, and that's your entry point. And then we got another one there, and these are like little, I guess, I don't know, Dan, they look like little baby bull flags.
Yeah, absolutely. Bullish consolidation. Anthony, I mentioned it earlier. The dots are pivot lows and pivot highs. The computer just spits them out. Pivot low is 3 higher low bars to the left and right. So they're just major turning points for trend analysis. All right, so I got 2 slides on this one. Got climactic, wide range igniting, and you see we're throwing these other concepts from page 1. Because it's not just a gap. Here's our gap breakdown, but I'm explaining why this gap breakdown is so compelling is because this is an ugly red bar. Look, that's almost the biggest red bar on this whole chart. Went sideways for 2 weeks and couldn't bounce. I got a declining 20 and 50. Now, look where it's gapping here, folks, at the bottom of this range. So now let's go look and see what the intraday looked like. There you have it. Greg and I like to look at trades and say it's a no-brainer. I mean, the odds are staggering that this is going lower. So start over here even was a breakout failure on the 15-minute chart. Closed at the low, bearish end of day base, gapped under support. Remember, we opened up right here at the bottom of this. So all 10 of those bars, think of them like football players. It's major resistance overhead. And I still have a price void here. This pivot is my next reference point of support.
Yeah, in 1 second. Let's answer Nicole. Scroll back to slide number 2. I think it's number 2. No, go ahead one. Oh, no, that one. That one, no. No, the prior one. Sorry. Yeah. So Nicole's asking if you have a buy at a gap breakout, where would you be likely to add on the same day or waiting for sideways consolidation? Well, on the same day, it infers that you're looking at an intraday chart, which is then what time frame intraday? It's a choice. So all of these pictures are bullish pictures. Insert one of those pictures into the time frame that you're utilizing with your bias from the daily chart, and that's where you would add.
Yeah. So, right. So on a 5-minute chart, when I say I have a compelling gap with a price void in the green room, you know, I put this on a 5-minute chart and I'm looking for any one of these pictures to get on board. I mean, you're obviously not going to get a pro gap intraday, but any of these other pictures is my entry. And many times it might not set up. The retracement might be too deep. I mean, the market might be in a tizzy.
Right.
There's other reasons not to enter, but, you know, Greg calls it factory work. And so the factory work is I have a compelling gap with a price void. I'm looking for one of those 8 pictures on a smaller time frame. That's my factory work.
Right. And just to add, you know, there's things to consider. And one of I think the first slide or the second slide was, you know, our different concepts. One of them was relative strength and weakness. So for example, you're looking at XYZ, it's moved up, and now you've got maybe a breakout setup, but the markets were running higher for the last 45 minutes into resistance, and now it's going to break out. It was showing relative weakness. So these different concepts, you have to work through them to remember those things and say, you know what, while that's a breakout setup, it's showing relative weakness. Something might be wrong here.
Yeah. All right. So this is page 2 of this. First 15 minutes, that little tail was an attempt to move higher into resistance. It couldn't get anywhere near this end of day base. Closed red, short below, stop over this end of day resistance, manage in between. Day trade or swing trade, absolute home run trade right there.
Do you see the difference here? I mean, we looked at the other slides, but what if this had done that, and then the rest of the day was like that and gap down? This could still work, but this is such a no-brainer place where it shouldn't go back up. Whereas this one, you just don't know because there's no resistance immediately to the left intraday.
Little bear flag here after so Greg, here's a pro gap right there. But I would say that gap is big, but it's a bear gap down from a topping pattern. So I would keep this on my list day by day, waiting for an entry. And this is my entry. I have a little bear flag. It's gapping under this wide green bar. Here's my end of day base. These vertical lines are pre-market. So this small little gap down you see right here. Here's the market open, and it's just a waterfall.
Terry's asking about slide 11, Dan,
Yeah,
where to put the stop. So on a day trade, would you still put your stop above a prior day's high? Well, no, you wouldn't need to put it above a prior day's high. And what I was pointing out before, when I drew a different kind of candle, whereas if it gets back above here, there's no reason to put your stop all the way up here. Something's wrong if this thing went all the way back up to there.
right.
So as a day trader, you'd need to be out. But one of the things that you could be thinking is that, this gap down here, and if it came up with, a few bars like that, and then did this, that would be your sell setup. On this day, it didn't go up, but different days, but this would be an ideal entry point right there.
Yeah, so he clarified. So to start the trade theory, yes, my stop is here. Once, I use the term altitude, and, that's for a bullish one. I got to come up with a new name on shorts. So once it starts tanking, so after it took out the 30-minute low theory, then I would move it to the day's high. Because now I have 2 bars of lower low, lower highs, and now it's working.
And this is a range expansion bar.
Right. So
As the bars get wider, it's picking up steam. It should be more difficult for it to get above immediately.
all right, so same but different. Bear gap after a pro gap, the bearish gap, 15-minute low or 5-minute low. This one, so here, this one's a pro gap. See how there's a shock element? So I had flat 20, flat 50. I'm at the bottom end of the trading range, and it's gapping over 1, 2, 3, 4, 5 closing prices, doesn't retrace much, and still moves. So this was FedEx at the time. We also buy and sell options on our trades. We buy options when they're liquid and we have a directional pattern. We short options when we're just calling a short-term top or bottom. So I think it was probably the 30-minute high on this bar. See this green line right here? We shorted the $215 puts that expired in a couple days, saying, I don't think it's going to go down here after this pro gap and taking out the 30-minute high. The same day on this green bar, we closed it at 47 cents. So we made 60% of the potential maximum gain. Look at that. I was in 1 hour to avoid 7 days of remaining risk. Here's another bullish gap we could have traded. Consolidation, there's just nothing going on here. Gap up, notice that there's little to no tail. That would have given another gap entry. So here's Greg's course, that the Advanced Gap Strategies course. You can go to mastertrader.com/AGS, read about it, and he walks through, like teaching any trade, how to assess these. And once you get the information like we're doing here, and in the morning in the green room, it just takes our brain a half a second to assess whether I have a compelling gap trade opportunity or not. Doesn't mean I'm going to hit the mouse at the market open, but it means that I call it on my tier 1 list. I mean, this is a great setup, and I put it in a 5-minute chart. So here's another one: breakdown failure, consolidation at resistance. This is what we call a price void. It means look to the left, there's insignificant resistance because of the momentum move down. So notice how it gapped right over multi-week consolidation. We have page 2 here coming up, but also notice little to no tail. So I'm going to be more aggressive wanting to get on this one. Here's my gap up, 15-minute chart. This was Morgan Stanley. Initial stop here. Once it gets altitude theory, I'm moving the stop under the day's low. I'm sorry, yeah, day's low for day trading. This is still my initial stop for swing trade until it gets altitude. It closed strong for swing trading. Then I'd move it over under the day's low. But notice how you can, for day trade, how easy it was to manage this, just raising it under these pivots. And this one, it broke out and came back in. So as a day trader, you would be out of that. Another type of shock gap, because this one was in a nasty downtrend. Look at the volume on this reversal bar. So it's still in a downtrend, but it's on my interest list. The next day, this is I should have put an arrow here from here to here. So it opened up here, deep into resistance. Do I buy at the market open? No, it gapped to resistance. The thing could fail and then slam right back down into the gap fill. 15 minutes, I have a beautiful range expansion. Same little bottoming tail there. Greg might have been in on a 2 or 5 minute buy setup. But if 15-minute chart closed beautiful, you could buy the 15-minute high. You could add here. In this particular case, we gave another put spread situation where we make money as long as it goes up, chops around, just stays above our short strike. We make the premium received. Come check us out. We have a no-brainer $7 trial for a whole week to our green trading room. This is where we're, instead of just talking about these beautiful slides we prepare, we're doing it in real time. We start at 9 a.m. Market review, sector review. Greg looks at market internals. I look at gap trades, open trades, our hit list for the day, for day or swing trading, answering questions all day long. I'm scanning together, which we're going to do here momentarily. We'll look at today's gaps. We got 5 more minutes here. Same but different. You know, big ascending triangle here. This is a pattern we call the bullish 1, 2, 3. Small little gap up, but look at the 15-minute chart. Look at that gap up. Cleared a day and a half of 15-minute resistance, bottoming tail, inside bar. I would buy the 30-minute high. So theory on this one, I would start with the stop the day's low because I have more information. I have 2 bars. So as a day trade, I'd buy the high, stop the low. Once it gets altitude, then I'm trailing. XAR, this was one we gave our ETF trader, which only trades ETFs for longer holding periods. Big bottoming pattern here. The 20 and 50 rolling are flattening out. Big price void here. So we gave on this gap breakout. This is a Telegram alert, how we communicate with our subscribers intraday for our 3 advisory letters. We give them the date, the symbol, what we're doing, stock or option trade, a technical setup, stop loss. So it's right here. It's what we're learning today. It's a bullish gap breakout daily and weekly. So we had multiple time frame in alignment, just went into a trail mode, rallied up here to the 200. These overlapping bars are our target. Made $12 on this. 28% return.
Let's answer these questions, Dan. Anthony, I'm not sure what that means. When using MTA, I don't know what MTA means. Usually the same time periods need to be the same. Year, month, week, daily charts. I'm not sure what that means if you want to clarify. And Terry said for intraday, you usually manage stops from the 15. That's personal, Terry.
Yeah.
Pam
Personal.
likes 15-minute charts. I like 5-minute charts. It's a personal choice. For early morning, I think 15-minute charts are too slow, but it depends on what your objective is. I mean, 2-minute charts, first thing in the morning are fine. Things are really active. You need to see more, I think, more information. If you don't like to trade, say the first half hour or so, 5 or 15-minute charts are fine. You might miss early opportunities, but that's a choice. It's not a right or wrong. Comparing charts, multiple trends. Well, Anthony, it depends on your objective. For a gap trade, first thing in the morning, a yearly chart is irrelevant. A monthly chart is irrelevant. A weekly chart might be. But starting with a daily chart, like what's being shown right here, with these moving averages, which relate to how we use them. I mean, it's not the subject here, but these moving averages relate that 50 MA is the same as the 10 on the weekly, and the 200 is the same as the 10 on the monthly. So I know this stock is bottoming out just by looking at it, and the weekly chart is turning up. It's breaking out. It's breaking out above resistance, and it's got room to go up. So it's a good setup. I don't have to look at the weekly and monthly and of course the yearly chart. It's information overload.
Right. No brainer. Closing breakdown, bearish consolidation. I'd be shorting stock. I'd be buying puts. I'd be selling a call spread. I mean, this is just a no brainer. So we gave this to our subscribers to short it under the low, and it gapped under the low. So what do, Greg? We go back to that picture of 9 bullish patterns, put it in a 5-minute chart, and we look to get on. And I can tell, since there's no bounce, because no tail, we short a 5-minute low. That's simple. So this is not a novice gap per se, because it didn't, a novice just in your mind's eye, see this topping tail here, far from the 20, up multiple bars. Hypothetically, the next day it gaps up to 110. That would be an exhaustion novice gap. But this one is a bearish gap from an M top with a climactic sell setup on the weekly. So that was a bearish gap. And this is what, remember our definitions? This is a continuation gap. There's the first one. We shorted an out of the money call spread, VIAC. And, you know, I forget if we shorted it also, but wow, that thing just tanked. But, you know, the confidence of this pattern daily, weekly, after this bar closes, that it's not going to go back up here to $105 is I'm very confident of that. Does that mean it can't gap up the next day and stop me out? No, it doesn't mean that. We take stops, but we're pattern traders. We have a bias. We have a probability of this trade working. And after this bar closed right there, the odds of it going lower was extremely high. Here's what I just call a bearish gap. We get into, you know, retracement concepts. This was also a climactic sell setup, and it's gapping, you know, just eyeball it, like 70% into this prior bar's range. The tail couldn't bounce much, closed at the low, just like the other one. The odds of that going lower are staggeringly high.
It closed so strongly. And look, people trading momentum, I'm not saying they're wrong, but they anticipate that the momentum is going to continue. And this bar says people are long, right? Bought it right into the close, and maybe they want to sell on a gap up. So now it's gapping down, and 5-minute bar, You could get a red 5-minute bar. You could have a green one followed by a red bar, a bearish 180. They're going to hit the bid. So we always look at these patterns as representation of what people are thinking and what are they likely to do. So that bearish gap is one in which, hey, if you were long, what would you do? You'd probably look to sell, especially, if you bought it here. Now, you've got a minor loss. If you bought it here, you might think twice, but at some point you're going to, scream uncle and sell.
And just like with stocks tanking, the volatility of the puts rises. The same thing happens when things rally like this, the volatility of the call options. So we went way out of the money, shorting a $70 call, hypothetically where my red dot is, took in $2.45 a share. Just crazy premium because the crazy speculative demand causes that. And that's why that was a beautiful shock pattern. This is on TC2000. This is one of the gap scans that we're going to look at right now. We always save time to look at examples for the day and answer your questions. So Greg's going to pull that up right now. But go to mastertrader.com/education. And this is just a little menu here. You can find our stock courses, option courses, our advisory letters, and then whether you're new to trading, mini courses. Check it out. Email us with any questions, and let's take a look at some gappers. So Greg, yeah, I mentioned AI had a beautiful pro gap a few days ago, which we sold a naked put on.
1 second, Dan. I picked the wrong thing. Screen. Okay.
And then also look at today, this I'll type it, VERX was on our tier 1 hit list today. So maybe look at that one too.
But this is the gap page, the layout. And when you become a member, we share these at no cost. If you have TC2000, we're not affiliated with them. But gap downs, this is a little bit broader. They're all mixed in here. And there's different criteria. I want to know if they gapped up, all these check marks means it's up on the day and it's still doing well. Options are in here. You can look at the option table. And then, did this gap above a big red bar? In other words, a shock, or a gap below. There were no gaps below green bars today. Yeah, Nicole. You just described you can get it with or without real-time data, options, everything. So if you want these scans to update intraday, obviously you'd need intraday data. And if you're interested, if you do subscribe, you need the gold package to have all of these scans working. So there's another page with a lot of other scans, but when you become a member, I share this, the gaps, as well as the combos and a few other things. So this one was in the top here. I'm just showing that while there isn't a setup here, and right away, it pulled back right on top of the support like we talked about. Nicole asked about FTNT, said it was holding. Well, that really didn't gap. That was what's called an inside gap. So
Right.
this is strong today, going sideways like that. So that looks good. You said AI, Dan?
Yeah, and also VERX, I typed it.
Okay. So this is kind of pulling back into what could be a buy setup in the next couple of days.
Exactly, because it has
This
beautiful.
was like a pro gap.
Right. After
Yeah.
that breakdown failure. Right. So we shorted puts on it, saying we'll take the stock if needed.
Yeah. So hopefully this can make a turn here, but we'll see.
I have an alarm, today's high.
Yeah. What other
This
one
one,
did you say?
VERX was today's list.
And here it is. It's right. I don't know how this is. I think this is sorted by percentage. So these columns can be sorted. You can look at the ones with the most volume, but this was a nice gap.
Mhm.
So here's a, like a bear sandwich kind of
30-minute
thing.
high.
Yeah, could be a 30-minute, 1, 2, 3.
Yeah.
Well, 30 here, but the entry's right here, right above the red bar.
Right.
That's good. It's still grinding its way higher. Software, that other one was software too. So software seems to be, I know it really underperformed last year. Seems to be kind of bringing up the rear now, these software stocks. Nicole mentioned SE
Yeah, that was a gap and go.
yesterday. I put that on an interest list. I'm gonna write it down and put it in one of my thumbnails.
Well, the weekly monthly looked fantastic, so it's on my watch list to see if it can chop around a few days. It looks great.
Yeah. This is why it looks great, It's been basing for 6 to 9 months. And this week is a wide range bar. Let's see if it ends that way, but yeah, that looks really good. Electronic gaming. Okay. MELI, try and get through quick. That's not a gap. That's just a consolidation and an uptrend.
But actually point to the gap on January 24, 5. To the left. Well, that's all right.
All right.
Right,
Oh,
there,
this-
right there. Yeah, that was a beautiful gap because it
Yeah.
was followed by a bear gap negated.
So it's not the subject of today, but we said there are other things to be considered. So we mentioned relative strength and weakness. Part of what we review in the advisory swing and options trader is market timing. And so while this was a very nice gap, you might, well, why did it pull back here? Because the market, what was going on with market internals and intermarket analysis was saying the market was going to correct. So I said, well, why did it pull back here? And that's the reason why. But then it resumed right away. And so this is pretty nice price action coming back from that correction. So a retest pattern.
Yeah, Greg, look at BC's Axon, and I can tell without even looking, and hopefully everybody in this YouTube right now can do the same. You can now visualize that tail. Greg and Dan told me, go look for one of those 8 pictures, and I could have got on board on a pullback to minor support on a 5-minute chart.
Talking today, Dan?
No, the last week.
Oh, here.
Yes.
Yeah.
Yes.
So look, part of the factory work is when something gaps, I automatically do this. All right. Those pivots, 3 bars to the left and right, those pivots are where buyers should step up. So this would be the area where buyers should step up somewhere in there. And also, if you were looking at it that day, you can see, in here where you wouldn't get anything on a 5-minute, but see this bar here, either this one, which it didn't trade above the high, or this one. Those are your action bars because they closed right at the high and it was preceded by red bars. So those would be your pay attention bars to press the button. Let's see.
Nice.
XLK. That's just an inside gap. Nothing going on there, but holding up pretty well. Again, part of our discussion pre-market and in the green room today was about interest rates and why is tech holding up relatively well to other things. Which yesterday got slammed so much, but we're going to see later in the week how things evolved here with this jobs report and, the Fed chair speaking and part of the damages that was done yesterday, like in the Dow, which looks like it's ready to enter the void below. Tesla.
Yeah, look at the 15-minute chart. Was actually a nice gap down today for day trading.
Yeah, under that bar. And
Couldn't
You're-
bounce.
new entry was right here on the reversal, probably on a 5 or the 2.
Yep.
You know, well, right here. I love when they have three dots up there because it's created multiple resistance areas. It was funny. And I mentioned in the room today when someone asked, there was negative news on it today. The steering wheels are falling off, so they're being investigated. It's like somebody didn't tighten the steering wheel down. It's crazy. But this looks like it's headed down toward that 50 MA.
And then, right, look at the daily. There's no support over there. So yeah.
Right. So that's bearish. That looks like call spread, if you could find premium for sure.
Yeah, we would have to go out. We had one, as you know, 2 days ago, and we took our profits, but we could look up the next week.
Don's mentioning Dash gap down to support and rallied. So, yeah, kind of, it's recovering. I'm
Let's
gonna put alert on this up here to see if it moves up tomorrow. And I'm gonna put one down here because if it gaps lower, that's gonna be a failure with that inside bar. And it is a sell setup based on this move down, but it would have to confirm by breaking lower. So you see how I put the alerts, I just right click and inserts the alert. OKTA gapped up a few days ago and looks strong. Yeah. So that's one of the things that, excuse me, if you set up, you see all these down here, these little tabs with different layouts. And so I've got another set of layouts on another monitor, and one of them is bullish gaps. And I imagine this was on earnings, and they're earnings gaps. And this is doing what you want to see. Notice it's software again.
Yeah.
This is what you want to see, is that after it gaps up, it doesn't fill the gap. Now, one of the fallacies is that all gaps get filled. Well, maybe in our lifetime, maybe.
No.
There are still unfilled gaps in the market from decades ago.
Right.
So this is acting very, very well. I'd want to look at the weekly chart. Look at that, Dan. Wide range bar, it's like a 1, 2, 3 with a bottom. Look at that red bar that didn't follow through and this nice consolidation. That's bullish.
Okay, but Greg, since we're on the subject of bullish price action and bullish gaps, look at crowd and explain to them that this is what you don't want to see.
The gap reversal.
Yeah, I because we're talking about Okta gapping up and going sideways.
Yeah.
This one gapped up and got slammed.
Right. So this brings up another good subject, meaning as a swing trader, would I sell this? I really wouldn't. I mean, it's easier said than done, but this is trending up and the day isn't over yet. I mean, it's 1 o'clock. By 4 o'clock, it could be a bottoming tail bar, but it's certainly not the price action that you want to see if you're in a trade. And sometimes things get sold just because they gap. So there's profit taking. Whether it actually follows through is another story. And so now, ideally, we'd like to see it not break that low, but we'll see what happens with it.
Here, maybe we'll finish on this one. Look at DKS from yesterday. That was a big gap.
Right?
Very little pullback.
Was that on earnings too, Dan?
Yeah, all-time highs. Yeah.
Okay, I gotta put it in my other thing here. Yes, and SE.
So they didn't sell that gap.
Right. Okay, I'm just typing in my thumbnails there. So there you have it. We have systematic way of looking at the gaps. Software finds the gaps. Sometimes you can see there's lots of gaps here, so you got to narrow it down, as we said. And from there, you find your opportunities. And plenty of these.
Thank you for
Become
listening to
swing
Master
trades.
Trader Live. If you
So
like the show,
primarily
please
talked
subscribe
about using them as
on
day
the channel.
trades, but
Tag a friend.
As you
who
see,
wants to learn
these can
something
set up
like
in
this.
great swing trades too.
Free chart of the week.
All the best. We'll be
Weekly
back next
analysis
Wednesday.
report sent
Bye-bye.
right to your inbox.
Exciting,
We're
everyone.
every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.